I had the pleasure of interviewing Jay, who is one of my students in coding great trading bots and has returned over 300% this year in 2024 with his automated trading systems. All of these systems are his. He built them from scratch, and he took the tools and software learned from coding great trading bots and applied it to his own portfolio that was tailor-made for him and met his risk tolerance. So he's going to be talking about how he made over 300% this year, his successes, his failures, and his outlook for 2025. Grab your popcorn and enjoy.
I believe this is year to date, and so it goes back until the top of the year. It should
January
be at least
1st.
nice. Yes.
Cool. Okay, so wow, this is incredible, Jay. So you're up over 300% for the year. Total P&L after commissions and fees of 22,000, and you said you started the account with around $7,000. Is that correct?
Right. So at the top of January, I had an account balance of 72.98. So yes, a little over 7 grand.
Unreal. That's incredible. So I want to have a disclaimer, by the way. What Jay has accomplished is very hard to do. Not everyone can do this. Trading is very lumpy. Sometimes you have good years, sometimes you have bad years, good and bad months and weeks and days and all that. So what you've accomplished, Jay, is incredibly hard to do. And it is possible to do, right? We both know that, but it is hard to do. So this is, once again, unreal performance. This is the export from NinjaTrader, which is your brokerage account with all your fees. So we'll go over some details. We won't go over every detail. I think the biggest outlier to me is this average winning trade of $135. That's incredible. I'm looking for $50 or more. So to do 135 for the year is above average. That is really good to see. And you are primarily trading micros, right?
Right. So I'm currently using a portfolio of 12 algos, and
Yep.
all of them are currently trading micros right now.
Okay.
Across, I believe, 4 or 5 markets. And so we got ES in there, NQ. We're trading gold, crude oil, and I have one gas algo as well. So 5 markets across 12 algos.
5 markets across 12 algos. And we can see the symbols here in the trade sheet of all the
Mhm.
trades you have. So that's great to see and also very transparent. Really cool. So I wanted to correct myself. The expectancy, the trade expectancy is actually the metric I want to look at, not the average winning trade. So my apologies. So expectancy of $18. Now this is per micro. So on a
Mhm.
micro basis, you want to see more than $5 per micro. That means on every trade, on average, you're making 18 bucks. 1,352 trades this year, and you're expecting $18 per trade. That's incredible. I mean, that every trade that you're placing is incredibly valuable towards you. You're going to be making 18 bucks, right? So think about that. I know it doesn't sound like a lot in most people watching, but this expectancy for e-mini contracts, which is what we trade the futures, I like to see $50 or more. And if you do that to micros, that'd be $5 because of the 10 times a factor of 10. So that's
Mhm.
incredible to see. Yeah, overall, this looks really good. Anyone watching this, which they will be, is going to see this and say, wow, incredible results. But let's actually dig more into trading this year. What has been the biggest mistake you've made? You've done great, but I'm sure you made some really big mistakes. Talk to me, Jay, about some of the biggest mistakes you made this year.
With regards to the largest mistakes, I think two main things come to mind at first. I think in the beginning, I want to say the first 3 or 4 months, I had a hard time not intervening with the algos. I had like 3 or 4 algos, I believe, at the beginning. I had three trending algos and I had a new version algo. And I really had a hard time just allowing them and trusting them to execute fully. I would come in and I would check on the account and I would see, I was up 800 for the day or a grand or whatever. And I had a hard time leaving the trade to full completion. I was exiting early.
Mhm.
I was just trying to snatch at any green I saw. And so for those first like 3 or 4 months, I really had to hone in on, dude, you put in so much time in coding up these algos and testing them. You have to learn how to trust them and you have to learn how to trust the the test, and you have to learn how to trust to let the law of large numbers play out in your favor, right? And so it took me a couple of months at the start to just learn how to feel more comfortable, not hopping in and tweaking things.
Mm.
And then the other thing, I don't want to say I failed at, but the other thing I had a struggle with at the beginning was I was really uncomfortable adding in more albums. You know, I had my little 304 and I was making some cash. I would be green 200 here, green 300 there. And I had a really hard time um, adding more and more trading systems.
Mhm.
And you, in fact, were one of the first people I saw who you were so confident in adding more and more algos. You would test, and if it seemed good, you would have it on sim for a month, and if it made money, you just started trading it. You would just start trading it live, right? And I really had to learn how to just add more algos and trust that the more you have, the more likely you are to overall increase your max returns and
Mhm.
also reduce your max drawdown as well. So I would just say that I had to learn how to get comfortable adding in more and more trading algos in there.
Okay, so two things. So first off, you were overriding your models. You were either closing out a market position or modifying your stop loss or profit target. And off the
Mhm.
top of head, do you think that cost you money, or do you think you actually made money from doing that?
I think it cost me a lot of money. I can't even tell you how many times I saw like I would manually exit up green, 500. And I would see the historical trade play out to 1200 or 1300. I sit there and I go, you don't know what you're doing. Stop exiting, man. Just leave them. So I learned the hard way that you have to trust them and you have to kind of let them work.
I've done that too. I've done exiting it out early and then, 2, 3, 4 p.m. rolls around and, whatever market I was trading continues to make new highs and you're like, ah man. It's been hard. So yeah, definitely overriding is a problem for all of us, and it's hard. People say that, algorithmic trading doesn't have emotions, but it does because you have real money on the line. And I found that you just can't look at your P&L, man. If you keep looking at that P&L, it makes you make decisions. And it's funny when you'll be down in a position and you'll leave it because you're like, oh yeah, it'll bounce back, it'll bounce back. But whenever you're up on a position and you're looking at that P&L and you see that green number in NinjaTrader going to 100, 200, 300, you're like, you want to right click and hit sell. Don't
Yeah.
do that because you've tested your model, your system, and it's going to do what it's supposed to do because you've tested it and you know the statistics. So, number one, don't override your models. There may be some situations where you have to, of course, if there's a technical bug or if, sometimes when you're adding or removing risk in terms of your trading systems and say the markets are really volatile and you just want to trade less risk because you can't handle it, that's a small exception, but 99% of the time, do not override your models. And then the second thing is you said you were scared of adding new systems to trade with. And were you
Mhm.
scared because your drawdown was going to get bigger, or you were just scared of more risk in the market, more active trades?
I think I was green on the account pretty early on, 10 to 20% after like 2 or so months.
Hmm.
And I was afraid of, adding more algos and adding more risk. And I didn't want to just, snatch at or remove all of those gains. And so I just thought that, leaving it as my little, 3, 4 algo portfolio was safe.
Hmm.
But as I've learned more from you and just from reading and learning and trading live, one of the smartest things you can do, in fact, is to add more systems in an attempt to spread out said risk and help to overall reduce the portfolio correlation and to
Hmm.
overall help you reduce the drawdown as well. So it's kind of one of those things that just take some time. And I think once you are trading live cash and you see your up green, you don't want to change anything. And it took me some time of just learning how to be more comfortable, adding on more strategies and adding on more risk in there.
Especially when you're up this much for the year. I'm sure there was
Mm,
a lot of months where you had a great month and you're like, I don't want to give this up. Why would I add more systems, right? Because if I'm adding more systems, maybe all the new systems I add could be massive losers and could get back on my gains. And I think what you're trying to say is that as long as they're diversified systems, right, it actually shouldn't really affect your gains as much. It may lower your drawdown and allow you to have a smoother equity curve, right? Process takes a while to learn. I actually wanted to talk more about your drawdown too. I'll share my screen again. During the year, I'll zoom in. You had a max drawdown of $5,424. This is assuming a base of 1 micro, is that correct? Or do you have some strategies trading 2 to 3
yes.
micros?
So most of them are trading one. I have a couple that add in, and so most of them trade one with one or two having maximum full size of let's say three
I see. Okay. So
micros.
yeah, and it looks like that drawdown happened. I'm gonna draw on the screen.
On March, I believe, right?
Yeah, I'm gonna draw on the screen. Looks like that drawdown happened right about here. Um,
Mm-hmm.
we can't see the dates, but obviously closer to the beginning of the year. So, sometimes you start trading and you might have started your system, maybe at the worst time. Sometimes you start your portfolio here and you immediately go into that drawdown, right? And that's painful.
Right.
Maybe down $5,000 per micro. If you're trading minis, that's 50,000 just relative on what you're trading. And in reality, you didn't really recover from that drawdown till probably around maybe here or here. You were break even from that drawdown per se, and then you made new
Mm-hmm.
equity highs. But a lot of people would give up. Let's let's make this a red draw. Oh, here we go. Most people would give up, maybe here or here.
Mm-hmm.
Be down in the dumps,
That's
you're down so much and you're like, oh man, it's never going to recover. And eventually did recover, and then boom, you make massive new equity highs for the rest of the year. And that's the process of trading, right? You're going to have those drawdowns, and they're going to be usually bigger than you expect. You can back test, calculate your drawdown based on a portfolio. Say it's $5,000. You need to fully expect that it could go to 7, 8, 9, 10,000, almost double, more than double sometimes, before you fully recover. Now, Jay, you do have a great start to the year. I mean, you started here year to date, great start on new equity highs, barely any small drawdowns. So it was probably easier for you to trade through. Yeah, that drawdown was tough. So even though you've had a great year, 300% returns, you did go through a sizable drawdown to get to that part. And even like this drawdown here, pretty big. There's drawdowns throughout. It's not super smooth. And it was probably, there was a couple bad weeks or months there that you had to go through. So wanted to highlight that.
absolutely.
Yeah, so I wanted to showcase that. And I do like it has all the trades here. Pulling for you said so you're running 12 systems right now and most of them are intraday, is that correct?
Yes. So of the 12, 11 are intraday, and only one is right now. It's a swing algo, and
Yep.
that one holds for a maximum of five sessions. So I don't really like to hold a lot, you know what I mean, for
Hmm.
weeks and weeks and weeks. And so I'm just now easing into learning how to be more comfortable with swing systems. And so I snuck in one so far, and it's actually a gold algo. It's in a trade as I speak today, and it's up green. So it has about three more sessions left, I believe. So we're going to see if it ends green or not. But swing trading is not for the weak, man. It is a hard way to trade for sure.
It is hard, yeah. I see your longest trade time was 105 hours. I guess that would be 4 to 5. I guess that'd be around 5 days, 4.5, 5 days. But your average trade time is 3 hours. So yeah, you're definitely more of an intraday focused portfolio. Yeah, with trading overnight, you have to be, of course, aware of the futures margin. So you have to make sure you add that to your kind of capital required when you're trading a portfolio because it does go up overnight, and you're going to have a lot more swings. But there is benefits to overnight trading, as we know. Sometimes markets trend easier overnight. Um, right now, specifically in Q4 of 2024, I found that overnight trading has been easier to trade. Like trends have been smoother for stock indices. Not all the time, but right now they're definitely doing better than intraday systems. And then also there's a lot of papers out there and common knowledge that most of the gains are from overnight. If you bought at market close and sold on open the next day, you'd be a lot more successful than buying at the open and selling at the close. However, that's still a naive way of thinking of things because we're not buying and selling on the close all the time, right? We're buying intraday. You might have a target exiting after an hour or 2 hours,
Mhm.
catching those moves. So super interesting to get your feedback on that. Super cool. I mean, obviously your returns have been very successful. We talked about your mistakes. What do you think you've done incredibly right this year that's allowed you to get these returns?
I think one of the things I was able to get right was I was really highlighting just you have to test every algo well.
Hmm.
Um, it's a common theme to see folks, run an algo through a test for only 6 or so months and then immediately hop into trading it live. And for me, I want to ensure that every algo I trade and every algo I add to my live portfolio has held up across at least 5 years. And so most of my algo trading portfolio right now, of the 12 that I trade and of the 11 that I have that trade intraday, I want to say 10 of them I've tested going as far back as 2008. And so for me, it really helps me to feel more confident that this algo can hold up in the future if I can see that it's held up in the past for 8, 12, 14, 15, even 20 years in the past.
Yep.
That lets me know that the algo can handle market shifts and regime changes and so on and so forth. And so I think at the beginning of this journey, I was really, really hyper focused on just quality testing. And I need to see a large sample size of trades, of trade history, and all of these things help me feel more confident that this trading algo will likely still hold up in the future. Of course, you can test an algo that tests well for 30 years in the past, and you start trading it live and it falls apart immediately. It's possible. But I think from a purely statistical perspective, it's important for me to just feel and trust that, to feel confident that the algos I'm using have worked for a long time in the past and has the potential to trade well in the future as well.
So you like to use you've one success you've had is you've put a lot of time into testing. You mentioned 5 years. Is that correct? That's around the back test time frame you want to use for your systems.
I would say more like 10, but minimum
10,
five.
minimum
Yeah.
5. So 5 to 10, and you're back testing. You're looking for specific metrics. What's an example of a metric you're looking for in your back test for a successful algo?
So top two off top is I want to see a net profit over drawdown of at least three.
Okay.
Um, I think lower than three for me is a little harder to trade live, and it's harder to trade in terms of the emotions and you know what I mean, like psychological effects. And so I want to see an overall net profit over drawdown of at least three.
Okay.
And then I also want to see a healthy average trade. So as you mentioned earlier, for E-minis, we aim for, at least I aim for an average trade of at least $100. And on the micros, I want to see at least $8 to $10 as well.
Okay. So 3.0 return to drawdown and an average trade above 100 for minis, and then for micros 8 to 10. Okay. That's pretty fair. Have you found when you're testing your systems, is there I want to focus on exits because exits are always an interesting conversation. I watched a podcast the other day, and he only used trail stops. That's all he did with, and he would try different, obviously entry combinations, but only use trail stops. Are you very creative with your exits? Do you like, is there a certain exit you like, or do you just test all of them and whatever you get, you kind of use?
I wouldn't say I'm very creative. I think a few of my algos you just end of day,
Hmm.
but I have a few in there that also use ATR.
Cool.
I'm a fan of ATR exits as they allow the algo to be a little more adaptable to how the price movements of ES or NQ or whatever just kind of changes over time. And so I've used ATR, I've used moving average, I've used end of day, I've used time. And one new concept I'm playing around with now is holding for a specific amount of bars. So you
Yeah.
enter a trade and you just hold it for 3 bars. I'm finding that holding for a preset amount of bars works quite well on the larger time frame strategies. And so I tried 1 bars on 240-minute bars, and so
Mm.
4 hour bars or so. And
Yep.
I'm a slight edge in using bar hold time on the higher time frames.
It's the constant argument for multiple exit types. What I found is that for intraday systems, if you have too many systems holding to the end of the day, if things don't go your way, you can have bigger losses than you expect. And you do want some systems exiting midday either through some type of profit target, stop loss, or a timed exit. Um, there's also, you could just build more mean reversion algos. So as your trend algos go one directions, your mean reversion algos start going the opposite direction. So it balances you out. But that's what I found personally to get a little bit too correlated. Tend to stick away from those just because from my systems, I've tested them to not have the risk adjusted returns I was looking for, but your algos are obviously different. You always got to test it for yourself. So if it's been working for you, and it clearly has by your performance, then keep at it. But yeah, exits are always a common theme. I think with swing trading systems too, with trend following systems, you want to be holding till as long as possible, using trail stops, exiting at a certain time or end of day. If you're building a day trading system, because you want to capture that trend, right? How many days have you seen where, say, Nasdaq, for example, goes straight up or down 400 or 500 points, and you want to capture that whole move? You need those trend algos holding till the end of the day or having a wide trail stop. Super interesting, really really cool. Talk to me about your ZTA community and program and more about that.
I wanted to, help out folks who are new to trading, who are either struggling manual traders
Yep.
or who are new algo folks and who are just trying to find an edge. And so ZTA is our own software company where we build and lease out our trading algos for folks to use and to try out. And so we also have a YouTube channel where I walk through our own journey, trading our algos in a live account. I'm not trading prop firms. I'm not trading anything on sim. Just kind of wanted to uh, share the ups and downs of the journey, share how hard it is, share the good moments, and share the hard times as well. And
Yep.
so we offer a full algo portfolio for lease called the ZTA Quant Portfolio.
Mm.
And it's an algo portfolio of 12 algos made from scratch that we tested over and over and over again across the years and years and years and years, and that we also trade live. And so if you are like I was in 2020 when I was new to trading and I was trading manually and I was trying to, draw my little trend lines, my flag patterns, and I just kept losing. Why? I did not have a proven edge. And so we wanted to find a way to offer these algos to folks who are just tired of losing, tired of struggling with the emotional hardships of trading, and who just want to give algos a shot. So if you are a person who is a new trader, or if you're more seasoned, highly suggest you check us out. The site is ZionTradingAlgos.com, and the YouTube channel is also Zion Trading Algos. And as of right now, I'm just trying to do more content around trading and algos and how it all works. And one of the ideas I got from you actually was to do monthly live trading recaps, monthly live trading recaps. And so just wanted to offer some more transparency, just wanted to offer some more transparency to the community and share how our algos are actually performing in the live markets, and to entice anyone who again is out there and you're just trying for years and years and years, and you got funded accounts and keep blowing them over and over again. Maybe it's time to try a new way, and maybe it's time to just try out a new approach. And so that's what we offer to folks who are just open to algos at all.
Really cool. Yeah, I'll be sure to link that in the video. Zion Trading Algos. And that's the I love the transparency of the monthly results. I think a lot of content creators don't do that. Hence why I do it. I think it's important to be transparent with your returns and showcase the true realities of trading. You're not going to make money every month.
Mm-mm.
Um, and also showcase the drawdowns, right? There's some tough periods of time with trading. So super cool. I'll be sure to link that Zion Trading Algos. And lastly, before we go, 2025 is going to be here in 3 weeks. I hope you got your Christmas shopping done. I am
I
halfway
have
there. I have
way
halfway
done.
there. It's getting too expensive. What are you excited about for next year with your algos? Are you going to be pushing to launch a lot more algos? Are you going to be chilling? What do you expected? What are you expecting?
Man, great question. I think for 25, I have a few key focuses. One, I want to try to introduce and add in more algos, right? I want to try to introduce and add in more algos. I think I'm currently trading 12, and after trading for a year and some change, I want to say a year and 3 months or so, I, of course, now have a lot more confidence that this thing can work. This
Yep.
proof of concept can actually work long term. And so the plan for 25 is to evolve and to grow from a 12 algo portfolio into maybe trading upwards of 20 algos.
Yep.
So one is to just introduce more systems across time frames, across more asset classes, across more strategy types. I think as of right now, my portfolio is very trend focused, and I only have, I believe, two or three mean reverting algos in there, and so I would love to introduce more of those as well to just overall, as you said, to help reduce overall correlation,
Mm.
to help reduce overall correlation, and to hopefully help to maximize our edge and increase our overall net returns. And then the other goal I have is I want to continue to create more software tools for traders. My formal training is actually in software. I actually work as a mobile app engineer, and I've been in tech for 12 or so years. And so I kind of have a unique insight into software and how to create quality software products. And so if I can just grow and create more useful tools for, again, folks who are new algo traders, folks who want to learn about the industry, the plan is to just increase our output in terms of quality software products. So the trading side, I just want to increase our algos. I want to trade more bots, but I also want to increase size. So I'm gonna need some cash for that. But over time, it's possible, for sure.
Love
Slowly
that.
but surely, I would say. Slowly but surely.
That's right. That's right. Well, I'm excited for 2025 for you, especially, and really proud of what you've accomplished this year. Once again, this is very hard to do. So what you've done to do 300% is incredibly hard to do. So really proud of you, Jay. Appreciate your time, and I'm excited for 2025. Hopefully, we have this conversation again next year.
Awesome. And dude, I have to take a moment here to acknowledge you for everything you have done and you have shown us. You were one of the earliest folks I found in the whole like algo trading um, space in late 2022, and I watched all of your stuff and the amount of content you poured out and the teachings and the code and the free strategies. Your community has helped me so much, and so it's extremely important for me to just um, acknowledge you for all you've done and all you continue to do for us, and sharing anything you learn. And yeah, I just want you to continue to flourish and to grow in your own trading and your own journey. And I want the community you have formed to continue to grow and flourish as well. So hats off to you, brother, and hope you have much more success than you see next year.
Thank you so much, man. Appreciate it. Catch you around, man.